What is the difference between a credit card and a debit card? Credit cards and debit cards share several similarities, like 16-digit card numbers, magnetic strips, expiration dates, and EMV chips. Both are convenient and easy to use, but they come with important differences that can impact your financial situation. A credit card is offered by a specific financial institution, like a bank, and it allows the holder to borrow money from the institution. When you apply for a credit card, you agree to repay the money borrowed interest. In other words, a credit card works like a loan facility where you borrow some money to purchase different products and services. On the other hand, a debit card is issued by your bank, and it is linked to your checking account. When you use this card to purchase products or services, you are using the money you already have in your account. There is no interest in using your debit card, since you will be buying different things with your money. The only difference is that credit card is plastic money. When no money is available in your account, you cannot use your debit card to buy goods. Credit cards belong to different categories that include the following. Standard cards provide a line of credit to the users for cash advances, balance transfers, or making purchases. They have no annual fee. Premium cards offer various perks like airport lounge access, concierge services, and special event access, and they come with higher annual fees. Reward cards provide travel points, cash back, and other benefits depending on usage of your card. Secured credit cards. You pay an initial deposit that acts as collateral. Balance transfer cards have low fees when transferring balances to another card. Benefits of using a credit card. You can get many benefits from using credit cards, such as discounts, cash, and travel points. You can use your credit card to get discounts on your flight bookings. The following are some of the advantages of using a credit card. Build credit history. You can use your credit card to build your credit history as all transactions appear on your credit statement. Timely payments contribute to a positive credit score, while late payments negatively impact it. Warranty and purchase protections. If you buy a product whose manufacturer's warranty has expired, your credit card company can provide coverage. Fraud protection. Credit card companies offer fraud protection, and the maximum liability of purchases conducted after the loss or theft of the credit card has been reported is $50. Credit card users can dispute goods that are damaged during shipping. Disadvantages of using credit cards. The main disadvantage of using a credit card is that it can so easily lead to a cycle of debt. When you use your credit card, you spend the bank's money, not yours. This money will be repaid with a good dollop of interest, and you'll have to make a minimum payment every month. If you have multiple balances on different cards, it can strain your brain to remember each one, not only your budget, and you may fail to keep pace with your monthly budget. Late payments can affect your credit history. Furthermore, credit card usage comes with interest and fees, since this is a form of short-term loan. The interests and fees vary depending on the financial institution involved. What is a debit card? A debit card can be used for making payments by deducting money from your checking account. You must have a savings or checking account to get a debit card. The following are the common types of debit cards. Standard debit card, linked to your bank account. Electronic benefits transfer cards. State or federal agencies issue these to users who qualify to use their benefits for making a purchase. Prepaid debit card, issued to people without bank accounts. Many people prefer to use debit cards to eliminate the danger of building up huge credit. With this card, you will be using your money, so there is no way you could rack credit. Debit cards issued by Visa or MasterCard offer fraud protection, giving you peace of mind. Debit cards don't have annual fees, and you will not be charged for withdrawing your money from the ATM. You cannot earn rewards for using your credit card. Your debit card does not help build a good credit score. Debit cards come with fees, such as using foreign ATMs. You don't earn rewards for using your debit card. Credit card myths. There are several myths associated with credit cards. and some of them make people skeptical about using these cards. While some myths hold some kind of truth, others are false. The following are some things you should know about credit cards before getting one. You must keep a balance on your credit card. Many people believe that you must have a balance on your credit card if you want to build your credit. Instead, carrying a balance on your credit card can attract interest. However, you should pay off your credit balance in full every month if you can. Make all payments before the statement date to maintain a clean record and avoid interest costs. It's best to close the card after paying it off. Closing your credit card after paying it off can damage your credit. This can lead to the shortening of your credit history, impacting your credit score. You can keep it active by making small subscriptions. High credit is bad. Another myth is that a high credit limit is bad, but the opposite is true. If you have self-control and you can manage all your monthly payments, there is nothing wrong with using a credit card. You should try to keep your usage lower and make sure you spend money you can afford to repay each month. Credit score increases by spending more. Some people have a misconception of believing that spending more can lead to a rise in the credit score. However, the truth is that credit usage and regular payments determine your credit score. Your credit score is not related to how much you spend, but the way you use your credit. You can lower your credit score by checking it. Another myth is that checking your credit score can lower it. The truth is that it is a good thing to monitor your credit. Hard inquiries will go to your credit history, and soft inquiries will not affect it. You can use your bank or credit card app to check your credit score in real time, and this is regarded as a soft inquiry. It does not damage your credit. Checking your credit reports shows that you are responsible, but you must not overdo it. You must pay the minimum due amount. Some people believe that you must only pay the minimum due amount on your credit card each month, but if possible, try to pay as much as you can. Although it is okay to make the minimum payments required by the credit card issuer. However, interest charges will continue to build, so paying more is better. Maintain your credit card usage at 30%. Some people believe that your credit card usage should be maintained at 30% to create good credit. The truth is that you should not exceed 30% of the limit on your credit. Keeping it at zero is the best method that can help you avoid paying high credit card interest rates. Your payment history is the most important factor that determines your credit history. You must avoid late payments if you want to build a good credit score. One credit card is enough. Although some people believe that one credit card is enough, you may need other credit cards since they bring other perks and benefits. As long as you exercise financial discipline, there is nothing wrong with having more than 2 credit cards. Other credit cards offer the best rates for international travel bookings. When you apply for a credit card, you should know its benefits to make an informed decision. Feel free to check with the credit company to get the best card that suits your needs. What is credit score and how to keep it stable? A good credit score is vital to qualify for the best mortgage, credit card, and competitive loan rates. A credit score is measured from 300 to 850, and it is used to determine your eligibility to get a loan. Your credit score tells the lender about your ability to repay your credit and potential credit risk. There are mainly 2 methods of measuring credit scores: FICO and Vantage Score. In the US, FICO is commonly used to measure your score. Credit scores are divided into the following ranges by FICO: 300 to 579, very poor; 580 to 669, fair; 670 to 739, good; 740 to 799, very good; 800 to 850, excellent. On the other hand, Vantage scores are measured according to these following ranges: 300 to 499, very poor; 500 to 600, poor; 601 to 660, fair; 661 to 780, good; 781 to 850, excellent. If you have a poor credit score, you may not qualify to get credit since you will pose more risk to the lenders. You may be charged high interest if you qualify to get a loan with a low credit score. Building credit score. When you have bad credit, there are different measures you can take to improve it. The following are some of the aspects you should prioritize. Make timely payments. Your payment history is the most critical factor determining your credit score. Make sure you pay all your bills and credits on time to improve your rating. You can set auto pay for smaller credits. Pay in full. To reduce your credit utilization rate, you should meet your minimum payment requirements. Avoid opening several credit accounts. Whenever you apply for credit, an inquiry appears on your report whether the loan is approved or denied. Your credit score will be affected by about 5 points, which can impact your score, although it is temporary. Maintaining several lines of credit can pose some challenges in the long run. If you have a good credit score, you can qualify for a mortgage, car loan, or other forms of credit. It also helps you get the best APRs from lenders. A good credit score also helps you get the best credit card with many benefits, like rewards and discounts. However, credit card issuers also consider other elements, like your monthly income and other credits you have. Understanding time value for money. The time value of money, TVM, is an essential tool that helps you understand the worthiness of money compared to the value of time in any kind of investment. The basic underlying principle of the TVM concept is that money has more value in its present form than in the future, since it can be affected by elements like inflation. For instance, $1,000 can buy you more things today than you would get with the same amount 10 years from now. The TVM concept helps you make an informed decision when you invest your money, considering that its value changes. You are likely to encounter some risks when you invest in a business. Therefore, you will choose the best investment option when you understand the inflation, interest, risk, and return elements. If you find a good investment option that gives you healthy interest, it can be a good idea to consider it since it will give you more money in return. The danger of credit cards. A credit card offers many benefits, but it can be potentially dangerous. If you are a new credit card user, you can easily fall into traps like believing the promises offered. If you intend to get a credit card, you should know the dangers associated with these cards. The following are some of the dangers you should know about credit cards so you can use them responsibly. Avoid the temptation to overspend. Many people often spend more when they use credit cards than when they pay with cash. When you buy with a credit card, you don't feel the pain as you do with cash. The bad part about a credit card is that you will be using the money you don't have. You can buy using cash to avoid this challenge. Additionally, make an effort to pay your balance in full. Risk of getting into a debt trap. Whenever you borrow money, you will be creating debt. If you continue to borrow without paying, you will create a debt trap, leading to a myriad of other challenges you can encounter. Debt leads to health-related problems, such as depression, stress, and other conditions that can seriously impact your well-being. It can be difficult to realize your financial goals when you are overwhelmed by debt. When you spend more money on debt repayment, you will be left with little cash for other priorities, such as saving for retirement plans. You can also delay other goals like pursuing your studies when you are debt-ridden. When you realize that you are failing to pay your credit card balance in full every month, you should stop using your credit card. Instead, use cash and try to live within your budget to avoid ruining your financial situation. Risk of damaging your credit score. If you miss your monthly credit card payments, your credit score will slide, and you may not be able to get a loan in the future. You also risk ruining your credit score if you fail to exercise discipline with your credit card. The best way to avoid this situation is to maintain your balance below 30% of the credit limit, pay your balance on time, and minimize the number of credit cards you have at any given time. Minimum payments can give you a false impression. Your credit card requires you to make minimum monthly payments to avoid late fees and maintain your account in good books. However, there is a danger that this can give you a false sense of security, since your balance will remain even if you maintain minimum payments. This will also attract more interest, so you will not be doing any good by paying minimum interest. It is a good idea to pay your balance in full if you can. If you cannot afford to pay in full, try to pay more than the minimum balance required by that lender. This will help you reduce the interest on your balance. Credit card terms can be confusing. Credit card terms and conditions can be confusing, impacting your repayment plan. There are serious consequences for misunderstanding the terms and conditions of your credit card. A single credit card can come with different interest rates, and you may not know the right ones to use. This can lead to increased interest rates and fees. You should read between the lines to understand the types of balances and interest rates each credit card carries. It is vital to consult your credit card issuer's customer service to get all the details you may want about your credit card. It is difficult to track spending on several cards. It can be difficult to track your spending when you have several cards, affecting your repayment plan. If you use your credit cards together with cash and debit cards, it will be difficult to monitor your spending. As a result, you may overspend because you will be out of touch with your finances. You should use different methods to track the expenses on your credit cards. For instance, you can track your spending manually or use special software. Check all credit card statements and report any suspicious activity to your credit card issuer. Credit card fraud. Credit card fraud is common, and it can lead to financial loss. There is a risk of losing your credit card or your personal information can be stolen. If you lose your card, you should quickly make a report to your credit card company. It is essential to monitor your credit card closely, and you should not share it with anyone. High interest rate. If you fail to pay your credit balance in full every month, there is a danger that interests will add up quickly. The interest charged by the issuer depends on the type of credit card you have. Choosing the best credit card that suits your needs is crucial to avoid issues like high interest. You also need to strive to pay your monthly balance in full to avoid high interests and fees. If you cannot pay the full amount, make sure you pay more than the minimum amount required. You also need to exercise financial discipline when you use your credit card. While credit cards and debit cards share many similarities, they are very different. A credit card provides a line of credit from the issuer, and it comes with interest, whereas a debit card is linked to your savings or checking account. If you want to maintain your finances in good order, a debit card is your perfect fit. If you are concerned about cashing rewards and building your credit score, you can consider a credit card. No matter which option you choose, you should know the benefits and downsides of each.